Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week starting of 9 to 14th of June 2019. First of all, as I record this video, go Raptors, let's go Raptors. It's 3-1 in the series, the NBA Finals, so wish us luck. Now enjoy. Now let's go back to the Forex trading and we will see if the Raptors are able to obtain a championship this week. First of all, thank you very much for watching, for finding the time. Really appreciated it. If you enjoy the weekly forecast, so please show your support back. Hit the like button, drop some feedback below in the comment section, and let's start. On Monday, as always, I will be publishing the weekly forecast in the text format this way. Okay, so you have it in my blog. Let me just open my virtual pen. I'm using Epic Pen here, wonderful thing. Okay, so just go to my blog and you will follow this. You will see that I'll be publishing on Monday, or just come back to the video and below in the description you would find the link for that. Okay, now what is that? That's a summary to the weekly forecast from the previous week. So now what we will be doing, we will be reviewing that, see what worked, what failed, what has to be updated and upgraded, and some new opportunities, and then preparing the forecast for the coming week. So the first one on the list, this is the Euro-Pound. Our idea was, skipping the explanation, the idea was get the rallies from here, or drops and rallies, and then start looking for the sells. The levels we were watching is right here, right? 089 and 090 areas. Fibonacci's expansions. So let's take a look. What do we have here? So that's pretty much not too much happened during the week, but we got a little drop during the week, and since then the rally with this bullish hidden divergence as a continuation, right? This is a bullish hidden divergence right here. So what's next? We are right now on 089, and yet it has the room towards the 090 due to the cycle expansions, which comes from let's just draw it from here, right? So this is the place. Now, if that is what's going to happen, this will have to develop slowly as the lag, with its own cycle and its own divergence. So the way we would look for the sells, because right now the bullish pressure, the expected bullish pressure continues, right? And what will trigger the sells would be if we start to face false breakouts. So if we see something like that, and one more time, right? This is called fake breakouts, failed attempts to create series of higher highs. If that starts to happen, then we would be looking on a last recent trend line in this given cycle, and by the break below it, we can start talking about sell opportunities. As long as it didn't happen, and that might not happen this week, we still don't know that, right? As long as it didn't happen, the pressure is still bullish, and only after that we can discuss about, once these signs would start and happen, we can discuss about the sells. Now the alternative to that is always triple lower highs, triple lower lows, and then we can discuss about the sells as well. So the Euro-Pound, the first part is developing. Now we are waiting to see the second part, and we will see if it's given to us this week. The next one on the list, Euro versus the Aussie. The long-term idea is looking for sells according to the weekly triple cycle, right? But the problem was the daily hidden divergence, as you can see here, right? So personally, still I removed this one from the previous week. Still nothing clear here. That's what we expected to see, some kind of a new low. Instead of that, we get a double bottom, same idea, same low, bullish divergence, and the rally happened. What's from there? Again, I personally would be looking for sell opportunities. I can't say I have them right now, so neutral on this pair for me at that moment. Euro versus the Kiwi. Now this one was great. We expected the second leg to develop on the 4-hour chart, or to see the range. and let's take a look what do we deal with, right? So we got a second leg down, simply perfect. The only thing here is we do not yet have a bullish divergence here, not on the histogram, not on the moving average. So technically I would not be surprised if we see any push like that, and from there rallies. The only thing that will basically remove this idea is break of this trend line. This would be invalidating the expectations of having one more push, divergence, and then the rally. Okay, so my plan is basically get the drop right now and start looking for the buys. Okay, so this. All right, that's the view here. Next one on the list for us. So again, so far, so following, and the daily, of course, is developing the hidden divergence, right? Right here. Bullish hidden divergence. So we could assume the trend is about to continue. How it will continue as the 4-hour chart would fit in. Then we have the trigger. So ideal scenario is this, and invalidation would be the trend line. Okay. Let's go back to the blog. By the way, speaking of the numbers, non-farm payroll disappointed big times. Now look what happened on the previous week fundamentally. We got Powell saying that the Fed is considering his next steps. They might go for a cut of the rates on the coming decisions. The market is already behaving like it's expecting at least one cut, probably even two. That's what the rates show there, the odds show there, and later on the non-farm payrolls came and disappointed big time. So there is one thing to pay attention to this week, and this is the CPI. It's critical numbers. If it will be as low as expected, or who knows, maybe even lower, this is a sign that the Fed is very likely to go and start the drop of the rate somewhere soon. That of course contributes to the weakness of the dollar, and we'll discuss about that as we reach the majors. Next one on the list, New Zealandian Canadian. After reaching the rally we expected a couple of weeks ago, this was our plan, rallies and sell, or the weekly continuation. So what we wanted to see is this, one more leg, divergence to form on the 4-hour chart, and start looking for the sells. So here we are, so far pretty much following the plan pretty beautifully, right? We have the two waves. We are in the divergence mode, the big picture and the small picture on the last part as well. So each of these legs offer that, and the daily chart of here. The daily chart offers its hidden divergence for the trend continuation. So we would expect the sell continuation going on, right? And as this is a trend line breakout, if it holds, we expect a good move down here. If we about to see one more rally, which could happen and would be more than acceptable, but we do expect in that case it to be fake high. So the plan here is looking for sell rallies with bearish evidences. Any rally that will come, and bearish evidences are rising trend lines breakout, false breakouts, and then reverse with lower lows, right? All the bearish divergences, of course, candle patterns, all that are great signs for the reversals. And here we are. That's the most critical levels to pay attention to. You can see these beautiful resistances drawn here. Okay, so that's pretty much for the New Zealand and Canadian. Okay, next one is the dollar yen. We were bearish for a while right now, and the level we would expecting would be the 61.8 of this daily cycle, making a clearance zone. And here we are, reach the area right here. Okay, and game over. Here we are, few points away of 61.8. Now we have the divergence against, so from my point of view, game is over, and I remove neutral here. I would expect, to be honest, some kind of a fight here, closer to the 107.50, the psychological area. I would expect some fights here, so lows from my point of view should provide us some short-term opportunities. Again, as per cycles, we have nothing obvious and clear at that moment. So for me, it's neutral. Enjoyed a beautiful drop down on this pair. We enjoyed a beautiful trend here. So it paid great for us on the last several weeks. Game over. Now you can see here the statistical indicator also showing us expected bottom, right? So we are there, and that's why I would expect these things pretty much to happen on the shorter view. That's it. Now, if you are new to the channel, I invite you to subscribe. Just remember to enable the notification, the ring bell, so you are notified anytime I get a new video for you. And I would like to ask your opinion. What do you think about my work, about the ideas I shared here in the forecast and the next ideas to come? Let me know in the comment section below in the video. And if you, again, new to the channel, I invite you to subscribe and join us to our totally free Telegram channel, where we share trading ideas, education, videos, articles, and many more great things. So to do so, just follow the link below in the description. Back to the charts. Next pair on the list of ours, pound Aussie. We were expecting to see some bottom around the previous low and get the possible reversal signs, right? So we wanted to see the slowdown on the 4-hour chart and higher highs to start and be created. Let's take a look what happened since then. We got the lows, right? We slowly start to see the pair possibly reversing. So the way I see that, we should face corrective cycle, and that could happen from here or by trying to spike one more low, complete divergence in here. So the plan is to see bounces. This plan is still on. Now, rallies to happen, once they happen, we are after setting them. Okay, this is the longer term view. And that's pretty much it. New Zealandian dollar. Now this one, I was expecting to see a rally during the week. Let me go here. Okay, and to start looking for bearish setups to continue with the weekly trend down. However, look what happened on, well, the rallies did happen during the week. Here we are. But the weekly view is now changing. So that might behave like a double bottom here on the whole movement, holding a very powerful area, 065 supportive area, divergence forming here. So would not rush into the longer term sales right now. That might be changing at that moment. So the focus here is to see pullbacks, which likely to happen soon. I'll show the levels, and very likely to see deeper movement and like second leg developing. And the way it develops right now for the New Zealandian is this. I would expect some fight around these areas. Okay, I would expect to see this divergence taking place, making some correction, and providing further rallies opportunities. So the weekly bearish trend basically now during the week changed with the divergence ticking up, might be supporting here the view as a double bottom, which means the deeper correction view. And that's why these rallies we were looking for buys, right? This was the trend line we were talking about. Two waves, breakout and rally. This paid, and the view right now for the a bit longer view, a bit longer target time zone, changes, and we expect drops and further continuation. Let's go to the next pair, which is the euro dollar. We again became bullish And with the break of the trend line and the higher highs, the expectations became further to the upside. So we got the trend line, we got the high, we got this high cleaned as well, we got the big high getting cleaned as well. So the road for the euro are to the upside. The roads, all the roads in there, and the main road, which is the weekly cycle, suggests us further rally, as long as the daily does not have anything against. So basically the plan is rallies, or any, for all those of you who missed any of these opportunities, then the plan is any retraces with bullish evidences, looking for the buys. The next, before I move to the commodities and indices, two new opportunities. One of them is the euro versus the yen, making this weekly look like a possible cycle with bullish divergence. So we might be experiencing some corrective cycle here. Beautiful engulfing, as you can see here, engulfing with a gap as well, full engulfing. So I like this view. I like the false breakout happens here. I like the fact that several candles in a row create higher highs, higher lows. Looks simply good. The way I believe we will see that going is to the upside. So retraces should be using us for buy opportunities. The main thing here is the invalidation level for this, and that would be the invalidation area. Okay, the last low. So this is a new addition to the list. And where is my other one? Dollar Canadian. Now dollar Canadian was not covered previous week, but I prepared during the week the video, special video for dollar CAD was shared here in the channel. So you can see here next to my picture, this should be a video suggestion right now, and you can watch that if you missed. So our plan was looking for the sells. Now this idea was shared during the week, and I'll explain what do we have here there. Basically the daily rallies slowing down, false breakouts, bearish divergence. We got a beautiful engulfing here with one more verification candle right on the psychological level of 135. Amazing divergence, and the view right now is even more bearish. Bad numbers from the US, good numbers from Canada on last Friday support the view from fundamental. So the expectations are bearish. Continuation. Our plan during the week was to get two waves after the triple cycle down on the 1 hour chart. And we got these two waves right here, 1, 2. Bearish hidden divergence for trend continuation built up. And we got a breakout. And here we are. Great continuation down. So I hope those of you who watched the video at least enjoying this beautiful sell. And what's supposed to be here, no signs against, not daily, not 4 hour. So we might be experiencing some retraces, but the whole idea here is bearish movement, and that's pretty much it. Now commodities. Silver, we wanted to see the rallies happening, break of the highs, retraces and buys. So here are the rallies. Part 1 happens. So any retraces, and we look to continue with the buys. Everything remains still there. Gold is the same. I'm not covering both for one reason. They are behaving the same. I believe we are building up the second leg here on the weekly. 1380 or higher should be our target. 1370, sorry, or higher should be our target. The daily chart should fit in and make this leg as a cycle by itself, therefore something like that. And that's pretty much the same for those of you who prefer to trade gold on silver. And the oil we abandoned previous week, just want to remind you, we reached the destination we following now is bouncing right here, very close to psychological level of 50. Beautiful bounce, hold. So yeah, we can expect some rallies from this point. Nothing I'm going to plan to trade, so it's basically just a view, general view. All right, and so what do we have next? Indices, the dollar index. Let's take a look on this one. Our plan was the trendline breakout and the lower lows. We are there, so expecting it to go lower. Retraces to be sold, and that's pretty much it. Nothing new to add. So everything moves according to the plan so far. So rallies for sells. The DAX, we wanted to see the bearish continuation until we face divergence. Here we are. So we got a drop. And we got a divergence block. So it came as a rock on a daily chart. Right here. So, what's next? My personal long-term view, my long-term bearish view, of course, remains on. Would be careful here because of two reasons. First of all, the excitement the Fed bring to the markets once again with possible cut of the rates. Second thing is that might behave like a triple double. So, if we break above the trend line, neutral sign for me. We'll be waiting for clear opportunities. Now, I've been involved in sales for a few weeks, as you remember. Been running this part, cashed partial with this divergence, and now this retrace kicked my position break even on the rest, so we'll be looking for new opportunities. NASDAQ long-term sales came with the monthly engulfing. We were expecting this low to finish and rallies to happen. That's exactly what happens here. Now again, we need to be careful with this place. Why? First of all, because of the Fed excitement. Second, because that might behave like a triple double as well. So this trend line was too stiff, so we can't really count on that. But we definitely have the Fibos and Fibonacci retraces. And if we cross straight leg above 61.8, go neutral, wait for clearer opportunities. Meanwhile, the daily is building up this hidden divergence, so the ideal scenario would be this, and then we can discuss about sales again. But the 61.8 has to fight against the rallies. If we straight cross above it, moving neutral until things become clearer. Dow Jones and the S&P, they all the same, so I'm not going to explain them all because really they all behave on the same view and the same price movements. And coffee, our long-term plan here was for the buys. Let's take a look, where do we stand? Pretty much the same place. Nothing really changed here. 1 week with dancing around, our expectations are still long-term continuation, and this is our invalidation area. Okay, so that's pretty much it. We have wonderful movements from the market, a lot of great opportunities, and it looks like despite the summer time that officially began, the market is still providing us with some good opportunities. So I hope you enjoy my work. I hope you enjoy the trading views and the ideas. If you do, once again, please show your support back. Your support, my personal motivation. Hit the like button, leave some feedback in the comment section. I really appreciate it, and thank you in advance. And I invite you to join me in the live trading rooms. We hold it on a daily basis. It comes with trading reports, and to do so, just follow the link in the description below the video. Thank you very much for your time. I wish you a happy weekend, and let's go Raptors. Let's go for the title. Hopefully we got it. We will get it this week. And for the Golden State Warriors or other team fans, sorry if we do. Enjoy the weekend, guys, and a happy trading week. I'll see you. Bye for now.